oil prices, inflation and exchange rates risks make interest rate cuts a tall order. Now, that's the opinion of Emma Pretorius, the head of investor relations at Amplify Investment Partners. Let's talk to her now for more about this. Thank you so much for joining us this morning, Emma. What are the current trends in the price of oil? We saw it's over $90 now. How high could it go?
Morning, and thank you so much for having me. So firstly, there's a lot of strategists that think it could go up to $100 a barrel. And that's basically just because you've got the supply side constraint due to the OPEC cutting production. You've also got it on the Russia side. And then on the other hand, you've also got the America surprising with, I think, everyone with the growth that we've seen there. You've also got China, although their real estate sector has been struggling, as well as industrial sector. There's been a big tick up in transport. So you can imagine after all of their lockdowns that they were very excited to go traveling. So that's put a lot of pressure on the demand side as well. And then on top of that, you've got the war in Israel, which on its own isn't really an issue, but there is concern that that could spill over and become a bigger issue on the supply side. So our view is that it would be it could be elevated in the near term. And although some people are saying it could get to $100 a barrel, our view is that over time for the remainder of 2023 and 2024, it should be around the $85 price point.
Now, what are some of the biggest risks to the market and for price stability specifically, and especially for a net importer like South Africa? What should we look for?
Yeah, so that's the big issue is that, and I think that's what's making the MPC be very cautious and hawkish, is that on the one hand, you've got El Nino conditions, which could be a big threat to the agriculture sector. You've got the rand or exchange rate, that's a big threat. And the reason for that is really if your rand is weak, because we are importing oil, it has a direct impact on the transportation sector, and then secondary impacts on food inflation. And then obviously we import everything else, so it really has an inflationary ripple effect. Yes.
So, like you just said now, everything yes, sorry, continue.
Sorry, no. I think that the fiscus is also a very big issue. And I'd like to maybe just get into a bit more detail with that. So at the moment, the rand weakening. Let's start from this. So just to give a bit of context. So over the last 15 years, what you've had is this inverse relationship between the dollar and oil. So what that really means is generally if the oil price goes up, you've got the dollar weakening. And so intuitively that makes sense because if your global, oil prices generally go up, if you've got global growth expectations or higher growth expectations, which then lays the foundation for risk on environment, and then is really favorable for the rand. So that really means that they generally count or set each other off, or or counterbalance each other. But now, because of the situation with our fiscus, where we've had this budget deficit that's been, continually having a budget deficit, growing at a rate that we can't sustain, it's meant that our debt to GDP ratio is above 70% and probably predicted to stay above that for the foreseeable future. So there's this risk that you could have this breakdown of the inverse relationship. So oil price goes up, but the rand doesn't strengthen along with it, which then could lead to a more, sustained or structural inflation outlook.
Emma, let's get to the big question. Do you think we can expect any interest rate cuts anytime soon? Not this year, maybe next year?
Yes, so what we see is that, based on an assumption of oil staying around $85, we do see inflation reaching the midpoint of the target range around September 2023. But we don't think we'll have to wait that long for rate cuts to take place. So I think the the MPC will be satisfied that they've done their job and comfortable. So we see rate cuts taking place at around Q2 of 2024, but we see a very shallow rate cut, so it's not going to be anything substantial. Like I said, there's a risk to the rand. You've got the oil price, you've got the fiscus, and I think the main goal of the MPC will really be to protect the rand, especially going into a election year next year where there's going to be more pressure on the fiscus.
Thank you so much for your time this morning, Emma. That was Emma Pretorius, the Head of Investor Relations at Amplify Investment Partners.